Are you interested in real estate investing but not quite sure where to get started? Do you want to get the know-how on creating ongoing passive income using the buy and hold strategy? Hi, I'm Janice Bowles, licensed realtor and co-founder of B Premier Ventures, a real estate development and consulting firm where we buy and beautify distressed real estate, renovate it, and resell for profit. With over 15 years of investing experience, B Premier has extensive knowledge in rural land development, fix and flips, and rental acquisitions. B Premier's current portfolio consists of properties within Florida and Virginia. Our firm's services includes investor project consulting, project management, and group coaching. For more information, visit our website at bpremierventures.com and schedule a complimentary discovery session or subscribe to our email list. It's free. Follow me on Instagram at Janice Bowles for additional real estate investing tips. B Premier Ventures, we buy and beautify.
Welcome to today's episode of Let's Do It Talk Show. It's your girl, Ladrine Howard Peterson, the CEO and founder of Do It, delivering on ideas and thoughts. And you know what I do in a nutshell, right? I help to turn dreamers into doers, and I do it from two aspects. I do it from the aspect of career coaching and career development, resume writing, interview preparation. You're looking to switch jobs. You have an issue on your job. I am your girl. And then from a business aspect, if you're looking to start a business, you have some ideas and thoughts and don't know how to bring them into fruition, or you have a business and you're looking for a marketing strategy or to rebrand, I am your girl. Here at the Let's Do It Talk Show, we were primarily created for entrepreneurs. However, we quickly realized that the entrepreneur isn't a whole person. So not only do we focus on entrepreneur aspects, we focus on faith, we focus on finances, we focus on the future, which is business as well as career, and then we focus on family and relationships. So today is the second Monday of the month. And you know what it is, right? It's Monday, Money Making Monday. So we have the gurus on with us today, and they're going to be running through a number of things. But the topic that we're focusing on today is all about insurance, the economic importance of insurance. So we're going to talk about life insurance, the importance in all the various types, homeowners insurance, understanding it and utilizing it, and then credit card insurance. Is it worth it to even purchase it? But you know what I like to do before I get started into the program? I like to talk about my week. So I had an exciting week, and what we're going to do is we're going to roll the video as I go through and give you an update on some of the things. So the presidential debate, that was funny. The Fly took the attention of pretty much everything that was going on. So Kamala's face and all of the memes that have been going around about various things. But more importantly, make sure that you all vote. Make sure you vote. And we're going to have a contest. So you saw my post about the Kamala Harris facial expression. We're going to do something next week that ties into nonverbal communication. And then huge shout out to Cheryl Wood for my Coach bag and my cards. I'm a card person, so 3 cards that really touched me and made my day. So thank you, Cheryl, for that. And then my cooking chronicles, y'all. So I laid it down this week. I cooked a pot roast. So my slow cooker and my crock pot is really doing the thing, but I have gotten into seasoning. So I shared pictures of my my spice and my seasoning rack. So I'm really getting into this thing, and the taste is wonderful. Last but not least, I want to send a happiest of happy birthdays out to my very best friend, Tina Nicole Johnson. Today is her birthday, and this lady I adore with everything. We have been friends and have known each other for 39 years. That's my ace coon boom, my A1 from day one, the sweetest person that you will ever want to meet, the kindest person you ever want to meet, and the funniest person. We talked all day today, but quickly, it's her birthday today, but yet she was delivering flowers to someone else, assisting someone else on their a medical appointment. She is just like the bomb.com when it comes to friends. We are kind of like dealing with this COVID thing because everybody knows that I take off and have done so for years the week of my friend's birthday. So I would have been off and we would have been somewhere at a beach writing our names in the sand. That's the thing that we do. Every beach we go on, we write our name in the sand and take pictures. But nonetheless, happiest birthday to you, Tina. I love you, and I will be over your house shortly. So we're going to jump right into the show. Here, while we are going through all of these different financial aspects of insurance, take notes. This show has so much depth into it, into really things that you can utilize and help you to make decisions in your everyday lives right now. So I have with me my contributing host today. So hi, ladies, and they're going to do some quick self-introduction. So first up, Janice Bowles. Janice.
Hey, everyone. How's it going? Happy Monday. How's everybody doing? My name is Janice Bowles. I am the co-founder of B Premier Ventures, where we buy and beautify distressed real estate. I'm in the real estate investment marketing, and I buy investment properties, renovate them, flip, and sell for profit. So happy to be here tonight to have a great discussion with regards to property insurance, homeowners insurance, and some things that we probably really don't know too much about, and hopefully can enlighten individuals with regards to that.
Awesome. And next up, we have Sacagawea Fanning. Sacagawea, let everybody know who you are.
Hey, everybody. I'm so excited for everybody to be here on Money Making Monday. Yay. I have so much fun each and every second Monday of the month. So make sure everybody tune in. And I am Sacagawea Fanning. I am the founder and CEO of Fanning Financial Group, LLC. I am a licensed life insurance agent, and I've also been in the financial management career field for over 20 years. I love helping people, showing them the best way possible to make their money work for them, especially through life insurance. We're going to give some really great nuggets tonight with that because people have myths and misconceptions about how you can use this tool. So we're going to break it down and we're going to show you how you can use it for you and your family and for generations to come. I'm so excited. I can't wait to talk to everyone on this, and we're going to have fun tonight. And thank you so much for taking time to be with us this evening.
Thank you, Sacagawea. So next up, last but certainly not least, is Shanae. Shanae.
Hey guys, happy Monday. I love the second Monday of, every month. I get to spend it not only with you guys, but with my wonderful contributing and host and our actually lead host. Thank you for the opportunity. I am Shanae Robinson, the Professional Credit Diva. I am the founder and CEO of the Professional Credit Diva, where I assist focused individuals and business owners to achieve their dreams through raising their credit score. I love bringing education to folks to help them to view credit in a totally different way, where so you can, when you think of credit, you can actually think of wealth building.
Awesome. So thank you all, ladies. It's always a joy to have you come on and share invaluable information. And the one thing that I love again is that the information that you share is for everyday people and exactly where we are, and it touches upon our actual situation. So first topic, we're gonna go into talking about life insurance. Sakajoea is gonna lead the discussion in that. So the one thing that I want to say is, especially in previous years, but especially this year, with 2020, the number of deaths, whether it was related to COVID or other symptoms and other issues that people had, just trying times when it's time to bury your loved ones and dealing with all of the various things, it's already sad enough that you have to deal with the emotions and the feelings that you feel from losing your loved one. But to put on top of that the financial aspect, if things are not in order and things are not in place, that adds on an unnecessary level of stress and a very high level of stress where it can impact a number of things. So, Sakajoea, let us know what you have.
Okay, no problem. Thank you, Ladrine. That was an awesome introduction and segue into this, because people really right now, you really need to be thinking about strategically putting your money in places, because not only with the COVID, people are, more people are on unemployment than ever. People have been on lockdown, and also the stock market has been a roller coaster, and it has really been doing its thing with, something, because, there are pros and cons, because right now you'll have those low days on the market. That's a nice way of trying to jump in there and buy things when they're on sale and, and ride that way. But you need to be aware of doing that. That's more of a long-term situation. And the best way for you to do things is to diversify your portfolio. And you have people on both ends of the spectrum, people who are gamblers who want to be in there and, they're really ready to take the risk. And that's great. But you also have people who are nearing that time when they're looking to retire and everything like that, and have college funds and things set aside for their family. So I try to tell people, don't think about life insurance the way it used to be thought about, because back in the day, it really was something you wanted to have in place. So in some case, something happened to you, your beneficiaries, your family, your loved ones, then not only have to suffer emotionally that toll of losing you, but on top of that, that financial toll. So with life insurance, it has evolved so much in the last few decades, and people who have money have taken full advantage of this. So what I try to educate people on, which is my foundation, my purpose, and my passion, is showing people how to utilize this tool in a way to make it work for you. Because the number one thing people don't realize, insurance predates the IRS. So there are literally IRS loopholes out there that let you utilize insurance in a way that can help you grow your money in a very conservative manner, but it can be something there for you down the road and when you need it most. And like Ladrine said, with this whole COVID pandemic happening, a lot of people are losing loved ones and things of that nature. So unfortunately, some of the byproduct of that is that you're seeing a lot of people who are building these GoFundMe accounts. Yep. There's nothing wrong with GoFundMe, but it is not a plan. It's a hope. And unfortunately, when there are too many GoFundMe accounts out there, people only have so many resources and can only choose and pick who they can contribute to, right, because there are becoming so many out there. So people can't be relied upon on thinking that other people can contribute. It's so much and so many that people have to make those choices. So you have to think about that before you do these GoFundMes, is how many are really out there, and then can everyone contribute to it? And not everyone can. So what it is that insurance is such a great, powerful product, because if you know how to use it, you can use it in such a way to set yourselves up. So what I try to tell people is that, yeah, there are certain types of insurance. Like, you really, at the end of the day, it's only 4 types of insurance at the end of the day. I don't care who comes to you, who sells you, what company, whatever. It's only 4 types. You're going to have your term insurance. That's your temporary insurance. That's great for when you want a large amount for a very affordable price. But keep in mind, it's term, and that means temporary. That means that low amount that you're paying for either 10, 20, 30 years will be great during that period. But when that period is over, that payment's going to balloon, just like a mortgage payment. At the end of the mortgage, when it balloons, that's how this insurance works. So it's great to have it if you can work it in a strategic way, meaning you have it for that set term, but you have a plan to say, when I get to certain years, either I'm going to convert portions of it to a permanent type policy, or I'm going to have something in conjunction with it, term like and a permanent piece together, working together for me to get one set amount. So it's strategic ways you can use it. More term insurance is one of the best ways to use it is mortgage protection, because your mortgage is only 15 to 30 years. So it's always great to have that little protection bubble over there in case something happens with you. But when it comes to a human life, you really need to have some type of permanent type of insurance, because the thing about it, it's like anything you do. Once you set it up, sometimes you want that automatic thing going and you forget about it. You forget, like, hey, I forgot this is going to run out in 20 years or 30 years, or it's going to balloon up. So that's why I always tell people, understand what these insurances do to make the best plan and decision for yourself and your family. Also, the next type is really what everyone knows about is whole life. Whole life is that one permanent type of insurance, which is great for you. You're going to be paying for it for an extended amount of time, especially if you're putting in a certain amount into your premium. If you have large sums of money, like sometimes people do, they get cash settlements from settlement suits and things of that nature, inheritance. You can kind of put it into like a whole life type product, but you need to keep in mind with whole life, really, it's only one way the cash is accumulating in a fixed account. And usually that can average between 1% to 4% approximately. So that's great. And plus it kind of ages out around 95 to 100, just to give you some quick tidbits. The next one is your universal. Universal is another type of permanent insurance. It's great, once again, that you're going to be paying for it. As long as you're paying for it, just like whole life, it'll never lapse and it'll never run out, and it'll keep you protected, right? But it also has a little bit more of a gain to it when it comes to the cash accumulation, approximately 1% to 6% when it comes to that universal. And then finally, you have what we call your variable insurance, which a lot of companies have moved away from because it got a bad rep during the 80s and 90s, especially early part of 2000s as well. Because with variable insurance, a person has to have a securities license because part of the premium is put into the stock market. So when the stock market is going up, you're winning. Your cash accumulation is building at a great rate. When the market goes down, oh, well, guess what? You're going to be losing as well. So a lot of seniors will put in this type of product and they lost a lot of money, especially during 2001 when the tech bubble burst, right. Stock market plunged, and around 2008, 2009 when the housing market burst and the stock market plunged. So you need to be educated and careful of what these type of insurances are. But there's also been one called the Index Universal Life Policy, or the IUL, that came around in the 1990s. And a lot of people, especially the 1% of this country, have seen how great this product has been over these last decades. Basically, you can become your own bank. And what I mean by that is that your cash accumulates in two very specific accounts with this life insurance policy. You have your fixed account, which can be ranged from 1% to 3%, but then you have your investment account. And this one can range from 3.7 to some double digits, depending upon the caps and the participations when it comes to these specific index strategies. Because what's great about this product, unlike variable, your money isn't directly into the stock market. It is based on the options that the carriers who are putting on all the risk now with these type of products, how they credit your account based on the performance of the index strategy that will be tied to either your S&P 500, your Dow Jones, or even Bank of America. There are various different strategies that they use. So once again, it's educating yourself. Another great thing when it comes to the Index Universal Life, it has this great powerful addition to it called living benefits or accelerated death benefit, where basically if you become terminally ill, which means you have less than 12 or 24 months to live, a critical illness, saying that you suffer a heart attack, stroke, or diagnosed with some type of cancer, or a chronic illness. No, and then for the cancer, if it's non-terminal, then it goes to the terminal, just to let you know, for those various ones. And then chronic, you can't perform 2 out of the 6 activities of daily living, or diagnosed with diabetes, all under the care of your physician. You can literally tap into the policy while you're living. That's why they call them living benefits. So think about all the relatives, your sister, brother who were diagnosed with cancer, who suffered a heart attack or stroke and weren't in the hospital more than like 3 or 4 days. They could tap into that policy and take care of medical bills, day-to-day expenses, and literally have this vehicle to help them. Then you can also use it with the cash accumulation to build for your kid's college account. Just like a 529, unlike a 529 though, if your kid decides they don't want to go to college, you still have access to the money without serving a tax consequence. These are some of the educational things you need to know. And then remember when I said that the insurance predates IRS, there's another loophole that if it's properly funded and structured, your Index Universal Life, you can set it up in a way that you receive tax-free income during retirement. These are powerful things that you need to know. Also, real estate investors, they're using these products where basically they can get multiple products and policies, dump in monthly amounts, and let these things grow, take the money out, borrow the money via a loan, don't pay taxes, not a hard money lender, not checking credit, not pulling any docs, and they're buying properties, flipping them, making that profit, paying themselves back, and doing it over and over and over again. These are the strategic conversations we need to start having in our communities, at the dinner table, and understanding. Stop being afraid because somebody didn't tell you about it who lives down the block. We need to start expanding our circle, expanding our knowledge, and understanding how we need to start making our money work for us. Because as you can see during this time, we don't know if a second stimulus is coming. You don't know if they're going to give you additional unemployment. You need to start figuring out the ways of how you can utilize your money to help you in the present and in the future. And we need to start changing our mindsets and changing our priorities. Because right now, a want may not help us down the road when we need it during a retirement. So that's how we need to start seeing how better ways we can start utilizing our money. And life insurance can be one of those ways where you're setting your kids up and showing them how to use it effectively, and they teach their kids, and on and on and on. That's how we started.
Absolutely. So you outlined a number of different types of insurance, and all of them have pluses and minuses to them. All of them have various benefits. And the last thing is that in terms of each and every individual person, you have to look at your situation. And unless you are into that field and in that area, you don't really have the education behind it to help you make the best decision. So you really should consult with someone. A lot of people have free initial consultations where they assist you, and Sacagawea has that. And not only that, can we have the flyer of your upcoming presentation this week where you will deep dive into all the different components and also offer the opportunity to assist people. Can we quickly talk about your event that you have coming up? And then later at the end, we can answer, because someone did have a question, and we'll answer the question at the end so you can have a chance to look at it while we transition to the next speaker.
Okay, no problem. Yes, I will have a Zoom webinar this Thursday, October 15th from 7:30 to 8:30. And so I can put that flyer, I'm gonna put it in the comments at the end of the show. So everyone who wants to do that, and they're showing the flyer.
Yes.
Awesome. Yep. And basically what I'm gonna do is go into a deeper conversation, deeper dive on insurance, answer questions, also Social Security. How your Social Security is affected by taxes, your retirement, giving you a little bit more insight into traditional accounts like your 401k, your thrift savings plan, 403Bs for our teachers and nonprofits, and EMTs, police officers, metro workers, postal workers. I'm going to be answering all of that so you understand what you have benefit-wise with your insurance, with private insurance that you have for yourself, and on your employer with your employer. Talking about Social Security, because people don't understand how taxes, how that can be affected with your retirement accounts, like a 401k, thrift savings plan, or a 403b, just to name some examples. And also in retirement, just setting yourselves up in the best possible way. So yes, I will be doing that.
Awesome. So a plethora of information, tidbits about each one of them. So you all make sure that you register for the upcoming Zoom call. It's free. And I've been on one of the calls where she goes through and answers the information. And if you have any questions in advance, she will share her information at the end. You can send over questions to help prepare for it. But you all, our mindset has to change. And we are in this situation of financial unprecedented times. Like, we have never face this, us as our age, even though we went through what we went through in 9/11, we went through the stock market crashing. This year, we have been in the status of people losing jobs and don't know when the city in the states, in the United States, is really going to open up. So you have to make sure that you take care of yourself and you have a plan for you, and you have something. That's what insurance is all about. Insurance is in case. And I talked about it like phones. People have mad insurance on their phones where they're paying insurance on their phone every month just in case something happens to their phone. Is your cell phone more important than your life?
There you go.
So, yeah, ponder on that. Think about that. And think about, like, how you can make sure that you make it work, rather if you start off with term or you move into the full. But again, make sure you register for Sakaja Wiz class, and make sure you have your questions and your information ready so that you're taking notes, so that you can really figure out your situation to help you adjust and help you change your mindset. So next up, we're going to shift on over to homeowners and property insurance, understanding it. So none other than Janice Bowles, who always bring information from a real estate mindset aspect. But Janice, can you please enlighten our audience?
Sure. So I'm going to basically talk tonight about a different type of homeowners insurance that's actually available. And actually there's 8 different types of homeowners policies that are out there. And it's basically intended for different property types and different coverages that's needed. So basically there is I'm going to go over briefly what the 8 are and kind of give a little feedback and talk mainly about the type that we have and perhaps some savings that we can kind of put in place and, some things to look for to make sure that we have adequate coverage. So the 8 different types of homeowners insurance, of course, there's a basic policy. There is what's called the broad form. There is a special form, which is the most common one that we have. So when we look at our declaration insurance policies, and it says special form, and it's have an HO3, that's normally what we have, the most coverage that we have for our mortgages or homes that we own as consumers. And then there's also what's called renter's insurance. I'm sure everyone's familiar with renter's insurance. There's also called comprehensive, which is kind of the top of the line insurance and what it covers as far as the home and also personal property combined. There's also condo insurance for those who owned condos. They have a special type of insurance that they are required to have. There's insurance for mobile homes, trailers, tiny houses, things of that nature. So they have a special policy. And then there's also what's called modified coverage as well. And then you also can get into like the commercial coverages for like multifamily properties. There's insurance for investors who go in and do fix and flips and builder's risk and things of that nature. So I'm going to basically kind of focus tonight on particularly the homeowners insurance. And the number one, the one that we have, which what I talked about, is called special special form, and that makes up about 79% of the nation that has this type of insurance coverage. So again, if you are a homeowner, you look at your declaration page, it's going to have on there an HO3. That's more than likely the policy that you have. And what it provides is it provides for all risk coverage, and it has an open parallel, meaning that it protects everything except for certain clauses or losses. And then the policy will dictate what those clauses and losses are. So basically, it'll say protects against everything except, but then it'll list the exceptions. For instance, something that may be not covered would be ordinance or law, earthquake. When we had the earthquake here in 2011, our policies, we had damage that was not covered. Water damage from floods, that's not usually covered. Power failure, neglect, war, nuclear hazards, intentional loss, theft, vandalism, mold. So our policies will list certain parallels that are not going to be covered, and that's the most general form of insurance that we have. The basic, most limited type of insurance is called an HO1. And it's just basically, like I said, it's basic and it's limited. It only makes up about 1.4% in the nation that has this particular policy. And it just basically covers fire, windstorm, explosions, but very, very limited. Smoke, vandalism, theft, a very, very limited policy. So 9 times out of 10, that's not going to be something that a homeowner would even seek to have to cover for their home, because it's not going to be adequate enough. When we talk about renter's insurance, a lot of people who are renting, we hope that they cover and get this type of insurance because it's going to protect their personal property. Normally, the folks who they rent from, the landlords, or so to speak, they're going to have a policy on the property itself, structural wise. But the tenants, if anything happens, there's a water main break inside the home or something like that, the personal property is not protected, and that's where the tenants need to come in and have, protect their property in that manner. These types of insurance are very minimum as far as yearly coverage. You can find some less than $100. Again, it protects your personal belongings, which is, definitely something that definitely we should have. A lot of buildings, as far as apartment complexes, they're going to require that folks have this insurance. Some private landlords, they may or may not require that their tenants have it, but it's a very minimum coverage, and it's definitely suggested if you are a renter. The comprehensive insurance, which is like the top tier, and it's the best, it's a policy that covers both your personal and your dwelling as far as the replacement costs by default. So it's going to be higher than our HO3, which is normally what we have. But again, it's going to cover both personal and the structure. And usually these are like high volume, high dollar properties. I would say anything over maybe $500,000 to $1 million or even more. This type of coverage usually folks get because it's going to protect. It's a package deal all in one, so to speak. Whereas you can get with our normal insurance coverage, we can get on additives, addendums to protect our personal property as far as, jewelries or furs and things. But this particular insurance, the comprehensive, it's a package deal by default. So usually some, higher end properties or homeowners, they will elect to take this type of insurance to make sure that their adequate, belongings are, indeed covered. Condos, again, if you own a condo, the Condo Homeowners Association dictates the type of condo insurance that you have, because of the fact that usually the HOA, they will cover improvements as far as the structure of the condos, but any interior improvements that you may have that you do in your condos is not covered. So you have to correlate with your HOA condo insurance and find out what those stipulations are, in addition to, what you're going to get for your personal condo. So that would be like the 6th type of insurance. And then when you have mobile homes. So mobile homes are basically, single wides, double wide trailers, Also, the tiny homes are going to fall into this category as well because they are movable as far as they're on chassis and whatnot. And you're going to find most mobile homes in single wides and double wides in kind of like rural development areas and whatnot. So they're going to have a different type of policy because of how they are structured versus a stick-built home. So their policy parallels are going to be a little different in coverage. Again, when we talk about our homeowners insurance, a lot of folks, one of the things that they need to be mindful of is making sure that the coverage is, the replacement cost is adequate. A lot of people just basically cover their homeowners insurance based upon the mortgage, but sometimes you want to perhaps assess your situation as far as, foreseen circumstances, and perhaps buy a little more insurance coverage than needed than just the mortgage. Again, it's a personal aspect, and it's each individual aspect. But normally, when we do have our coverages, we're covering the mortgage, and it's going to cover replacement costs. Some of the tips when we're purchasing homeowners insurance that we should keep in mind is the amount of coverage that we need. Of course, take that into consideration. Also, pay attention and look at what your policy covers. For instance, in Florida, Florida is low-lying, below sea level. Flood insurance, that's a total separate additive versus a homeowner's insurance. So a lot of people, they're not really aware of that. And then also where your property lies as far as if it's in a flood zone versus not being in a flood zone, which all can be verified through a FEMA. You have to take all that stuff into consideration when you're buying your policies and things of that nature. And then pay attention to the deductible. So yes. We know we have to have the insurance, of course. We know that, we have to make the payments, whether it's going to be a lump sum payment or a monthly payment. But try to look at it from a standpoint of the higher your deductible may be, that may help your monthly payments be a little lower. But then also, if something happens, your expenses are going to be higher as far as the deductible payout. So you kind of weigh the options out as to, do I want a higher deductible, let's say $5,000 or even $10,000, and a lesser monthly payment versus a lower deductible? I'm going to pay a little bit more on a monthly basis or yearly basis, but then I won't have such a big hit if something unforeseen happens as far as my deductible amount. So, as consumers, we can kind of finagle that in a sense as to, how much we want to structure out and budget, for our insurance. Of course, we have to have the insurance. It's there as, unforeseen circumstances. But again, you can kind of budget in that aspect. And then, again, just choosing the best way to pay, whether it's a lump sum or monthly. Do your research as far as the different companies that's out there. There's plenty of companies out there. And just ask questions, just ask a lot of questions. Ask exactly what you're getting the coverage for, what it entails, what it doesn't entail. Different regions have, of course, different policies that impact. I mean, the policies on the East Coast are going to be definitely different from the policies in California. And, like I said, from the policies in Florida and things of that nature. So it's really basically educating yourself on the different types that we have out there. And then, of course, for investors, like I said, there's plenty of companies out there that specialize in specific temporary type insurance. Like, for instance, I'm an investor and I deal with a lot of fix and flips. So I would need a policy just for the time being, as far as, maybe a 90-day time frame in order to get the property renovated and, protect my interest as I'm getting the property renovated. So they have fix and flip policies that's out there. There's mixed usage, again, for commercial buildings, tenant buildings. There's portfolio types insurances. There's just a lot of different packages out there. So you definitely have to educate yourself. So remember, our main policy is an HO3, and it usually covers replacement costs.
So Janice, you just outlined a lot of information that is very useful for various people. So I wanted to touch on a couple points that you made. So one was about ensuring that you have adequate coverage, not only looking at the amount you're going to have to pay and trying to do an evaluation that way, but calculating it based on the replacement cost. So you have to do your homework and make sure that you look at your valuables around your house and really do an inventory. There are a lot of checklists and other things that are on the internet that you can find to help you think about that, because I just went through the process of reevaluating my insurance, and it came about because everything that's going on with the weather and how last year we had mad crazy storms. I had to get my roof replaced, and they were going to repair it, but it was in 2 different places, so I had to get my entire roof replaced. So I had to go through the understanding of a whole number of variations of things. And to be honest with you, other than when I purchased my home 14 years ago, it was my first time that I actually sat down and really went through the understanding of my insurance policy. Luckily, I had it situated where I was like fully covered. I had to pay my deductible, but everything else was just like fully paid for, and they worked into the various things. But I say that to say, right now, if you pay attention to all the things that's going on, like the other day, it hailed in my backyard. People on my street, luckily and thank God, nothing happened to my home, but they had various things that were going on. And especially now when people getting these solar panels, if something goes on a portion of it and different things like that. So I'm glad you touched upon that. I'm having people to really think about your current situation. They have like standard packets, but you have to make sure that you are being educated, going through and understanding what are your individual needs, so that when you make your purchase or when you look at it to make adjustments, you make sure that it is addressing your individual needs.
Absolutely.
The one thing that I want you to talk about a little teeny bit, investors. So when you talk about when you are engaged in a property and your goal is to flip it in a short period of time. So you buy 90-day insurance or so. But just say in circumstances, because I know like when COVID got into the midst of things, a lot of investors, not them purchasing, but them being able to sell and flip their properties, it changed the game of it. So just diving a little teeny bit, like what one should do. How do they reevaluate their situation? Do they get an extension, or what do they do with the investors' insurance?
Well, with regards to the insurance, so for instance, and again, you know, the real estate, it's a regional thing. As far even for us as investors, I mean, this particular region still was doing very, very well. You know, multiple offers and things of that nature. But for instance, if an investor got into a situation whereas perhaps, let's say, they had multiple projects going on and it didn't quite sell as quickly. I'll use an example. And they have this 90-day insurance or whatnot, because again, they're buying the insurance to protect based upon their time frame that they're going to, you know, finish the project in a sense. They can always go back and add an extension onto it. They're going to pay a little bit more to the policy. So normally that's what, you know, is going to happen. And even under normal circumstances, because you never know, sometimes a project may go not as intended.
Right.
You may find some little bumps here and there.
Right.
So if something like that does happen, you can always get an extension as far as, you know, buying more coverage to protect your interests. So it's pretty simple. There's definitely a company that I work with, and they offer that type of insurance, which is good for investors. It's going to be higher, of course, because it's a shorter policy time frame, but the risk involved not having it, because I know a lot of investors that don't buy insurance, you know, they kind of take a risk in a sense. But that, you know, that risk, you know, hundreds of thousands versus, you know, a couple of thousand for a short-term policy, it outweighs itself. So, you know, it's all about strategy. It's definitely all about strategy. And I just want to touch bases on, again, knowing what your policy covers. There was a particular situation where there was a property that had some flooding. A flash flood happened after a rainstorm or whatnot, and some flooding took place on the outside of the property as far as the topography, which led to some water intrusion into the home as far as the basement. Now, the coverage was just basic coverage, okay? Our basic HO3, homeowners insurance coverage. That flooding, that intrusion that went into the basement was not covered because of the fact that it was an act of God in a sense, which was one of the parallels that's not a part of the insurance plans. So if that individual would have had a broad form, which is an upgraded form, which is the second coverage of homeowners insurance, that will cover, like, say, snow, sleet, overflow of water, things of that nature, then they would have been able to have, their property adequately, repaired and things, and not come out of, full of pocket expense other than a deductible. But so again, you have to be careful and know in details what your insurance policy covers, what you think you may need, ask for it, ask about it. You got to educate yourself, because if you don't know when a circumstance comes about, it's really a big, big loss, and it's going to be even more of a debt for you. So educate yourself.
Absolutely. It's a crazy way to think about it. Again, we're talking about mindset from every aspect and taking risks. Like, it's not a risk of a small impact. It is a huge thing, and people walk through when things don't happen. But that moment that it does happen, it can be a huge impact. So think about carving off small little components of it to pour into this, so that when something big happens, you're covered and you don't have to worry about anything at all. And we could, but there's not enough time to even go about appliances and different things like that. But I'm not talking about like the smaller ones, but when you think about your refrigerator, your ovens, your water heater and cooling systems, all of those various things, those are things that you definitely need to have in play. But what we're going to do is transition over to we'll circle back around and let everyone give their social media information quickly at the end. So let's go to the third topic. So credit card insurance. This has always been one of my questioning things. And Shanae, I'll let you definitely go in and have your discussion about it, and then I'll give my comment and my personal opinion about it. I won't go first. So Shanae, I'll let you go in.
Okay, thank you. Hi, everyone. Following the theme of insurance, as everyone before me has stated, insurance is in case of. So you want to be protected in case of. So, the only thing that we definitely know is going to happen is, that we are going to leave here. So Sacagawea's topic, having life insurance, is definitely a must for all of us. The other things, as far as like your homeowners insurance, you definitely have to have that because it's required, by law. The other insurances, as far as like your credit card insurance, it's definitely in case of, because you want to be protected in case of something happens. And with the pandemic that has happened for 2020, it has brought to the surface a lot of things of in case of, because we never know exactly, what's going to happen and things of that nature. And with me in the credit industry, what we were able to quote unquote take advantage of to a degree with the pandemic is a lot of forgiveness. So we had a lot of forgiveness from the creditors and things of that nature because it affected everyone. It didn't just really affect an individual or anything like that. It affected everyone. But suppose there is a time where it only affects you, whereas though you're the only one, that is laid off and you have debt and things of that nature. So credit card insurance is in case of something like that, happens. What you want to definitely do is do your homework. You definitely want to do your research to see if it's something that you can benefit from. Because a lot of times what the credit card industry does is they are in business to make money. And the way that they make money is they make money on interest. They make money on charging you fees and things of that nature. So they are definitely in business to make money. And one thing that I stress to my clients over and over and over again is that the way that, our great United States rates people is based upon credit, how responsible you are with it, and how effectively you pay your debt back and things of that nature, because they can't track a dollar bill. The only thing they can really track is what you use on credit and how you pay it back. Yeah. So we think when we get approved for a credit card, like, oh my goodness, I got approved. Yes, we're so happy. However, you don't really need, quote unquote, the credit cards. They need you. That we keep them in business. They need us a lot more than you really, really need them. What I suggest to my clients is to get one credit card that you can purchase any and everything from. And if you have a good enough credit score, then that limit will be high enough, whereas though you don't have, 4 store credit cards, unless, you have like the Target Visa or something like that, where it gives you the rewards and things of that nature. But you don't want to have a lot of $200 credit card limits, from like Macy's or Sears or, things of that nature, because one, the debt does accumulate, and you think, okay, well, it's only $20, but if you have, 10 or 15 cards, I've even had a few clients that have had like 30 cards. Wow. Just because they say yes does not mean that you have to use it, because there is going to be a time that is, what if? And so if you have to pay to one card versus having to pay to 15 or 20 or 30 different cards, then you are more likely to stay out of trouble, okay? And so with credit card insurance, it sounds good to a degree, because it's, in case you lose your job, they can pay, a portion of your bill. Or if there's a death of the credit card holder, then they can pay, a portion. My suggestion to you guys is, if it's something that you're looking into, you definitely want to look into it. You definitely want to read the fine print. There are 3 main credit card insurances. It's credit card, life insurance, so that in case of, the death of the credit card holder, then, it could possibly pay off the entire amount, but then it may only pay off a minimum amount. You want to definitely know what you're signing up for, what you're spending extra money on. There is the credit card disability insurance, whereas though if you are out of work, or you are, temporarily disabled, if it will pay a portion of your bill, if it'll pay the minimum amount of your bill, the minimum amount that's due, and then for how long will it actually go into effect, and how long will it actually pay off, that coverage. And then there is the credit card involuntary unemployment insurance, whereas though if you're laid off, due to actions that, are not of your own doing, you can't just up and quit and then think, well, they gonna pay my credit card, bill off or anything like that. But if it's involuntary, whereas though, it's a big, massive layoff or something like that with your company, if, they will pay off a portion of your bill, or they may pay off the minimum amount due. But then again, it's not something that goes on for a long term. So you definitely want to do your homework. You want to do your due diligence, and you want to do your research, to see if it's something that, would benefit you. However, what I'm going to say also is, if you don't, spend crazy, then, hopefully, you won't have to rely on credit card, insurance, because you keep your bill down to a minimum, and you keep it under the 30% debt to income, ratio, then you would, be in a much better position. And don't get credit card insurance confused with. It's two types of credit card protection that's kind of built into our credit cards. And one is the price protection insurance that's kind of included, whereas though if you purchase something with your credit card and then you see it, at the same store, if you find it for a cheaper amount, then, they would refund, that the difference, to your card, if it's done within a certain amount, of time. That's not anything extra. That's just them, providing you extra service. That's good business. As well as the purchase protection insurance, whereas though if you purchase something with your credit card, you have your receipt, you have all of your documentations, like, a computer, a gaming system, your high ticket items, or all your items actually. But, if something happens where though, it gets destroyed or theft, in your vehicle from your home, things of that nature, then they offer a certain amount of protection, for your items as well. So those are actually kind of, included into you actually having your credit card. It's nothing, anything extra, but the credit card insurance is not free. The three that I went over with you earlier, those aren't free. And you need to read the fine print because it's anywhere, they can charge you anywhere between 45 cents to 79 cents per $100 on your remaining, balance. And it doesn't sound, like a lot if you have, just a $200, balance or whatever, and you're like, okay, that's 90 cents. But if you have like a revolving card and you use it constantly, those things can, add up, it can compound. And before you know it, you're spending like so much more money than you really actually need to. Like I said, the credit card companies are in business to make money. And so, with that being said, it's like, will they cover the minimum purchase? How long will they cover it? How much will they actually cover it? It's different questions, that you want to ask. And what I suggest to you guys is not just, reading the fine print, because sometimes the print is so small, it gives you a headache, or they kind of like talk in circles and you don't really know what they're saying. What I suggest, if it's something that you're actually interested in or looking into, then to get a rep on the line and let them break it down to you. Have your pen, your paper, everything that that you need to take, quality notes and everything where you can refer back to it. Me, myself, what I suggest, being in the credit repair industry, is to spend wisely. Don't go overboard. Keep your debt to income ratio, below the 30%. I say, once you get it to 30% and below, then knock it down to 20%, knock it down to 10%. One thing that I like to tell my clients is that it's not if an emergency is going to happen, it's when an emergency, is going to happen. And if you have your credit card, say for instance, you need a new refrigerator, your hot water heater went up or something like that, and you don't have like the homeowner's, protection plan that's going to cover it or whatever, you have to come out of pocket. And if you have the available credit and your credit, your debt to income ratio is beneath 10%, and you have to make a big purchase, to make your life whole again, then what you can do is use the available credit if you have it. And once you do that, you still aren't over the 30% if you spend responsibly, throughout, the time and everything. And then it still won't, affect you, because if you're under, the 10%, you have to make a big purchase. And, the big purchase might take you to 15 or 20%, your debt to income ratio, then you still are sitting pretty. It's not going to drop your credit score. It's not going to hurt you. You're still able to, pay it down effectively and everything. And, you're not really disrupting your life. You're not coming out of pocket. so to speak. You don't have to tap into bill money or anything like that. Just because you have the credit, don't use it. You know what I'm saying? Don't use it all willy-nilly, and that is a technical term. But you definitely want to do your homework. You want to know what your options are, and you want to weigh the pros and the cons with any and everything. I'm not pro credit card insurance, and I'm not, for it either. What I am for is just, being responsible, changing your mindset, and that'll help you to change your spending habits and how you look at things.
Wow. Like the amount of information and the value of the information that you ladies gave tonight, just truly amazing, because for everyone that's on the line, and all the questions that did come up, they are very everyday type of situations. And Shanae, I don't have any more to add about the credit card because you and I are on the same page with it. Again, just as with every type of insurance, it depends on your individual circumstance. You have to do your homework and you have to understand the benefits of it. But don't only look at the benefits. You have to look at the negative aspect of it in terms of your situation and where it is. The only thing that I'll add to that is you brought up my card. I always talk about my Target card. I pay it off at the end of every month. So my Target card actually pays me. Every February, I get a check from them. Not a check, it's actually on a gift card, and I'm still spending mine from this year. So this year, I actually got back $335 for them. But as Shanae mentioned, don't have like these multiple credit cards. If you're trying to do something where you're earning rewards for it, if you have one main card or a small number of them that you focus on, I use it to pay bills that I have to pay anyway and different various things like that. And then the remainder of it, I pay it off at the end of the month. So I have it where it's auto paid, so it works for me. So I don't need insurance on that because any insurance would be taking me just from 1 month to another one. So you have to understand, read the information. I be on the phone with the representatives for however long I need. That's what they get paid to do. And I ask them all of the questions that are necessary. So I'm going to run down and quickly do my closeout, and then I'll let them, each of our contributing hosts, provide you with their contact information and their social media information. So our upcoming show next week is nonverbal communication and body language. Y'all saw Kamala Harris, right? So we are going to have a hashtag Kamala Harrison facial expression challenge. I already posted one where I was playing the other day, and I was just like, let's make this a thing. So I'll post more information about that. And we have Dr. Karen Hills-Pewter, who will be on the contributing hosts for that week. So huge shout out to every one of the listeners, and you all are chiming in and writing up notes and everything. I so appreciate you all. Felicia Fanning, Veronica, Tamika, Monica, Andre, Major, Zakia Butts. I'm going to have to bring you on the show because your comments, you are like commentating as we go through. Kimberly Hamilton, Brittany, and everyone else that's on the line. Thank you so much for tuning in, asking the questions. I hope that the show was very helpful for you. So quickly, we're going to go around and let the ladies provide their contact information. So any questions that they didn't get to answer, that you'll be able to reach out to them so that you can obtain information and set up a consultation if you have any questions about the various insurances. So let's start with you, Sacagawea. How can they contact you?
So for my contact, like I always say each week, is very, to the point. It's on Facebook. It's Sacagawea Fanning. You can also go to my business page, Fanning Financial Group, LLC. That's on Facebook. Instagram, I am Sacagawea Fanning. And also LinkedIn, Sacagawea Fanning. Also, I'll put my information in the comments. I can be reached at 706-717-9590. That's my cell phone. And I'll also put my email account on there so you can reach out to me. But yes, and Zakia, reach out to me. I can give you more information on that because it takes a little bit more answering for your questions about the index being taxed. So please reach out to me and let me get you that information, because that's when we go into what we call a modified endowment contract, and I'll get into a little bit more detail for you, okay?
Yeah. Thank you so much for that information. And Janice, how can they contact you?
Yes. You guys can reach out to me. I do consultations as well. I'm just everything real estate. I'm a licensed realtor in addition to, a real estate investor. I can be reached on Instagram at Janice Bowles. On Facebook, you can reach me on my business page, which is B Premier Ventures. And also on my website, you can set up a time frame. We can definitely consult with regards to even more information with the homeowners insurance. If you guys have any real estate information that you're interested in, or you're interested in getting into investing, I can kind of navigate you, help you out with that. You can reach me at www.bpremierventures.com, and I'll put that in the comments as well. So thanks for joining us.
Thank you so much. And Shanae, how can they contact you?
Guys, on Facebook and Instagram and IG, I am the Professional Credit Diva. My email is info@professionalcreditdiva.com. My website is theprofessionalcreditdiva.com. And you can also reach me at 443-973-7555. If you would like a free 30-minute consultation, just text consultation along with your name again to 443-973-7555.
All right, ladies, so that is our show. Make sure that you follow the show on all social media platforms. We are Let's Do It Talk Show on IG, Facebook. Follow us on our website, www.letsdoittalkshow.com, as well as make sure you subscribe for our YouTube channel. We upload them there, but make sure you follow that way. So thank you all, everyone, and I will see you all next week. Good night.